It was 2015 and I remember trading HDIL futures. On that day, I had a simple plan. It was called the ORB strategy. And based on the opening day, there would be a long and a short taken every time we crossed. The backtest was beautiful. And back in those days, we used to do the backtest manually. And I was very excited to trade. And I was also trading futures, which meant I could go short and long. But that day, I lost the most amount of money because I entered, exited. And guess what? HDIL was just going sideways. It went nowhere. But I entered and exited so many times, breaking my rules, losing a lot of money. I thought there's someone out there who's probably doing the same thing right now. So we'll make this video on how you have to look at 5 things to make sure you create a good trading plan. Let's get started with point number 1. But before we do that, hit that subscribe button because हम बहुत मेहनत कर रहे हैं and I want to make sure that the subscription number goes up. Show some love. The first point is very simple. We're going to talk about time frame. The time frame really matters. If you're an intraday scalper, you're looking at 5 minutes, 1 minute, maybe 10 minutes. If you're a day trader, you're probably looking at slightly higher time frames. I used to trade the 60-minute. I personally always think the weekly, monthly are nicer time frames. Even for traders, I don't think there's any advantage in trading lower time frames. You end up paying the broker more and you stake too many trades and it's just not easy to manage unless you're using an algo. So make sure you use the time frame that you actually need and don't use a time frame that is just unnecessarily making you lose your hair. For example, a trend trader who looks at this Reliance chart on the week will see no trend at all. Like me, I don't see any trend here. But if I shifted time frames to say 60-minute charts, I would see a beautiful uptrend from May onwards all the way towards August in 2023. So the time frame really matters. Another problem people have is that they take an intraday trade, then the market falls and they say, "Koi baat nahi, delivery le lete hain, we'll just hold it and when it goes up, we'll sell." Please don't do this. When you're trading intraday, trade intraday. Close the position, follow the stop loss, end it before the day ends. When you're trading long term, focus on long term. I think I know a few long term investors who invested, saw the market go up the same day and exited with a 2% profit. Dude, are you serious? Second is overtrading. Remember that HDIL example I told you? That day I could have probably ended with just 2 trades and called it a day. But I was angry. I wanted to make money. How did my backtest not work? Why didn't I make 1 lakh rupees that day? And I thought I'll just keep trading and somehow I'll hit the amount. And that's called overtrading. It's called fighting. It's the way you actually lose money. So to prevent this, you basically need a stop loss for not only each trade, but also a day, also a number of trades. This is also part of your trading plan. And if you want to learn a basic trading plan, go and join Prime. We think everyone should know what a trading plan looks like, what a system looks like. So we thought 0 to intermediate in trading education should be free. So you go straight to the weekend. We run it every Saturday and Sunday. Fill up the form, you'll find it in the description and learn a basic trading strategy. You'll not only get feedback from a mentor, you'll also do this with a bunch of other traders. So hopefully you'll learn something. So when you're trading and you make a loss, don't rationalize the loss by creating a story in your head. You could tell yourself the news was bad. You could tell yourself the results were bad. You could tell yourself a bunch of things to make yourself feel better. But the truth is, the market is supreme. Accept it, move forward, improve your trading system. Number 3, have a trading plan. It's very simple. You need to have a mathematical model to choose a stock, find your entry, find your exit, decide how much to risk per stock, know historically what is your win rate. Something above 51% is also good. How much money will you make in a winner? How much money will you make or lose in a loser? Obviously, the losers have to be less in numerical value than the winners. And you also need to know other things like drawdown, etc. Once you have all this information, you can then trade. A lot of us think about looking at a company saying Reliance अच्छा है, खरीद लो. That's not how trading works. You're probably thinking about investing, but that's not how investing works either. Find a way to create a trading plan that's backtested and just trade that. Otherwise, just don't trade. Go towards investing. Do index investing. Or do it properly. Basically, you need a trading plan. Don't do anything without it. Number 4 is position sizing. Now, what does this mean? Basically, this is the holy grail of trading and investing. It tells you how much money you can lose maximum every single trade. So let's imagine your entire capital is 1 lakh rupees. Traditionally, you can't lose more than 1% on a single position. So let's take an example. Let's suppose I have 1 lakh rupees and somehow I buy options worth 50,000. Now let's suppose that option ka value becomes 0 because when you buy options, they can go to 0. How much did I lose on my capital? 50%. Half. And your sanity, and you'll go into depression. So that's a problem. You have to make sure you calculate your entry and your exit and imagine your stop loss is hit. Do you lose more than 1%? Keep reducing your share value until, in the worst case scenario, you're not losing more than 1%. Now, I could probably make an entire video just around how the math actually works, but I can't do that in this video. But if you do the math, most people won't be able to actually afford and trade F&O. Not because of the margin requirements, but because when you take a loss, it will be 10, 20, 30% of your capital, and that is why traders lose money. Think of it like this. If you don't have any chips to bet, how do you play? Just like a business. Would you risk all of your business on a single day, single event? No, right? You have to have capital to run the business. It's just like that in trading. Make sure you're measuring risk. And finally, number 5, do your own research. Build your own plan, which is backtested. Don't go to an advisor that is unheard of or unregistered. Don't go to Telegram tips. All of these things that you think are the way to actually make money are actually not true. You need to function like a hedge fund. A hedge fund has a system and it trades it. A lot of people will tell you to listen to uncle and uncle will tell you what stock to buy. Please don't do that. The point's very simple. This is a skill that you have to learn from scratch. Learn it and you can bear the fruit your entire life. So learn, don't take advice from someone. If you thought this video was useful, hit that like and subscribe button. But more than that, watch the other videos we have on the platform because on YouTube we put out a lot of content, 3 videos every single week and a bunch of shorts too. So I hope you found this educational. See you in the next video.
Cut. ठीक था ये? I'm so tired about talking about this. ऐसा लगता है nothing new, but स्टॉक टट गया ना, ये वो वाला है ना अभी, अच्छा अभी टाइम फ्रेम. इसको 3 बार बोला तब भी हटाया नहीं है, टट का टट ही है. आज तो मैं 17 सही बोलता हूँ लेकिन 2008 गलत बोलता हूँ.